Good afternoon, everybody. Welcome back to day 3 of our trading class. I hope everybody's doing great. If you're just joining, like if this is your first time joining, then you've missed a lot. I encourage you to go and watch the recording of the first 2 days, right? So you can catch up on what we have learned so far in this boot camp. You can go to the YouTube channel. I shared it on the Telegram channel, so I'm gonna share it again after this class. You can just go to that YouTube channel and then watch the recording so you catch up. Okay, there's a lot of information there that is gonna help you a lot. So yeah, today's day 3, and then we have 2 more days left to go. We'll have another class tomorrow, and then the last class is gonna be on Monday at same time, 12 p.m. Eastern time. Okay, so I'm gonna hand over the mic to Earl so he can begin the teaching. And feel free to ask any questions, guys. Don't be afraid to ask question. If you're confused, if there's something that he said that you didn't understand, this is your time to ask. All right, he's not gonna be mad to answer your question. So type your question in the chat box, and if you want to speak up, you can also request to speak up instead of typing in the chat box. Okay, so without further ado, let's get started right now.
Okay, thank you guys. Good to have you all once again. It's another time for productivity. It's another time for value. It's another day to get so much value from this bootcamp meeting. So this is the 3 of the bootcamp, Advanced Quasimodo. As you said earlier, if you didn't join us or you didn't catch up for day 1, day 2, kindly go to my YouTube channel and click the link on the Telegram channel and go to the YouTube channel, go watch the video and get value from those videos. Also try to like and share the link, okay? Like and share the link, invite your friends to follow up, okay? Okay, so today I will be teaching on supply and demand, and I'll also be talking on key resistance and support. Okay, so yesterday we talked about liquidity, all right, and I explained different forms of liquidity, different types of liquidity, and I gave us criterias, okay, that makes a liquidity valid, most especially the structural liquidity. So today we're talking about supply, demand, key resistance, and support. Okay, so take note of this. Money from the day 1, I said money moves from one point to the other. So while money is moving, money creates structures. Okay, so without money, we don't have structures. So the reason why you see structures is because there is money, okay, moving from one point to the other. But the truth about the movement of money is that it operates with the law of supply and demand, okay? So it operates with the law of supply and demand. But this is what I want us to catch. I want to unveil a secret here that so many people do not know about the Forex market. Now, and that secret is simple. The law of cause and effect. The law of cause and effect. Okay, so that is a law called the law of cause and effect. So what does it state? It states that for every effect you see in the market, okay, open bracket, price. Okay, sorry, I'm going to price movements and reactions. there is always a cause. Okay? In other words, nothing happens ordinarily. Okay? There is always a reason. That is okay. So there is a law called the law of cause and effect. So this law states that for every effect you see in the market, open bracket, price movement and reactions, there is always a cause. That is, there is always a reason for money flow and price movement. Okay. Okay. We can say structure. All right. I'm just going to adjust this so that we can. Okay, so to every reactions you see or price movement or structure you see in the market doesn't just happen ordinarily. There is always a reason why structures are being formed. Price is moving from one point to the other. Okay, so if you understand the law of cause and effect and include it in this strategy, then you're going to do well with this strategy, okay? So this is what the law of cause and effect states, okay? Knowing that every reaction you see, every structure you see doesn't just happen. That is the reason why you are seeing the structure where you are seeing it, okay? And why the structure is about to be formed. So, and there are two important keys that we must note, okay? And these two important keys, I sum them into one. And the question is this: where is price coming from, or where is structure coming from? Simple. If you know the law of cause and effect and you ask this question, where is price or structure coming from? Just because you saw a structure doesn't mean you should take that trade. Take note of this. Just because all the criteria for your structural liquidity, your BOS, the sweep is correct, doesn't mean you have to take that trade. No, you don't need to take that trade. The next thing or the next step that you need to apply or do is asking yourself, where is this structure coming from? Or where is price coming from? Because the reactions you're seeing or the structure you saw in the market is just a reaction. It's just an effect. It is not a cause. Something happened somewhere, okay? It has a foundation. That's why it is coming out as structure. That is the reason why you are seeing it as structure, okay? Or that is the reason why you're seeing the Quasimodo structure or the structural liquidity structure, okay? So you need to ask yourself, where is price or structure coming from? And there are two key areas, okay? There are others, but these are the two key areas where structure comes from. Number one is the supply and the demand. Number one is the supply and the demand. So we have number one, supply and demand. Number two is key resistance and support. We don't just trade a Quasimodo strategy because we saw structure. No. We trade it because all the criteria are met and we know where price is coming from. Or we know where the structure is coming from. Or we know the cause of the effect of the structure. So you need to know the cause, okay, of the effect of that structure. That structure is an effect. So this is what I'm going to do. This is what I'm going to do. So we have this structure. Okay, let me leave it here, or I'm going to delete it. Okay, so I'm going to draw a structure. We have this. Now, you agree with me that this is structure. And you also agree with me that the criteria for this structure is correct. Okay? But take note of this. This you see is just an effect. This whole thing you see is an effect. Okay? So we can say structure is an effect. But you don't want to take this trade with a knowledge of effect only, because measuring all the criteria, putting your Fibonacci, knowing that, okay, the liquidity must be at 50%, okay, everything is valid, those are just effects, okay? But you want to know the cause. Why is this structure happening? Or what has caused this structure to form where it has been formed? That is where supply and demand comes in. So for this case right now, you want to trace back, okay? You want to look at your left-hand side and locate where this effect or this structure is coming from. So you want to look back and say, okay, I can see that this structure is coming from a demand zone. So if it is coming from a demand zone, what do you do? Sorry, I'm going to delete this. So we can say demand is a cause. Demand is a cause. So this will say demand zone. Okay, so can you see what I'm trying to say? After finding out all your criteria, the next step is, where is price or structure coming from? And you must apply the law of cause and effect on this strategy. I have seen the effect, and all the criteria for the effect is correct. Structure is an effect. It is reacting at that zone because something has happened or something has made it to react. But you don't want to take that trade. You don't want to gamble your money. If you take that trade, it might be a deception, okay? And that trade might go on a loss. So you don't want to take that trade based on just knowing the effect. The knowledge of effect is not enough. You must have the knowledge of cause. What is that thing that has prompted or has made this structure to be formed where it is? So the first is what? Supply and demand. So on a buy trend, on an uptrend where you have a Quasimodo or structure, okay, you want to locate the cause, and the cause is the demand zone. So the question is, if I have a structure if I have a structure, okay, let's say I have a structure and all the criteria are correct, but when I look back, there is no demand. Okay, I look back or I look at the left-hand side, no demand. What should I do? If no demand, what should I do? Should I take that trade? Don't take the trade. Don't take the trade. So I'm writing it. Don't take the trade. Even though you have a valid structure. Okay? Even though you have a valid structure, but you can't trace the demand or the cost, don't take that trade. Do you understand the explanation? If you understand, kindly go to the comment section or the chat box and say, I do. You saw your structure. You saw the structure, but you can't find the cost. Don't take that trade. Because without a cost, that trade will not hold. You need to have a reason why you want to take that trade. Okay? So you must have a reason. And one of the reasons is valid structure and valid cost, which is demand or supply. So I just showed you the demand. Now let's go to the supply. So this is demand. Let's go to the supply. So the supply is on a cell structure. So we have a cell structure. On a cell structure, we have a valid structure. This is an effect. Okay? Structure is an effect. Take note of that. When you have the effect, what is the next thing you want to do? You want to look at your left-hand side and look for a supply. So this structure must be coming from a supply. As I said earlier, you want to know why do we have a structure here, or where is price coming from? So you want to have a supply zone, maybe on a higher time frame, okay, maybe 4 hours. If your structure is 1 hour, okay, maybe you want to see, okay, that this structure is coming from a higher time frame supply, okay. So this is supply is the cost. Okay, supply is the cost. We are applying the law of cause and effect. Your structure, I said, is an effect. Your supply is the cost. So you don't want to trade an effect without the cost, knowing the cost. Okay, for example, if someone is sick, he or she needs to go to the hospital to undergo some series of checkup, scan and all that. The reason is because the doctor want to find out the root cause of that problem. It's simple as ABC. It's not hard. The reason why you go to hospital, for those who fall sick, the reason why you go to hospital is because it's not just to take medications. You're going there to find out the cause. And until you find out the cause, it is an abuse to take medication. Self-medication can lead to death. Okay, so that's why people go to hospital, to find out, undergo diagnosis, all right? Those symptoms that people experience are just effects. They are just reactions, okay? But the root cause must be found out. So that is why we are looking for the root cause of this structural effect. So for a supply, for this Quasimodo strategy, the supply is the cause. So you want to trace back, where is price coming from? You want to know where price is coming from. If I can see where price is coming from, and even though I have a knowledge of the structure and all the criteria are met, I want to look for the cause, the supply or the demand. So if I can see that, okay, this structure price is coming from a supply or the demand, then it has a high probability of holding. You don't want to gamble, okay? You must have an edge in the market. There are things that you want to, I told us from the day one that as a trader, you must look for things. You must have things, criteria that you are looking for. If you don't see those things, you don't trade. Okay? Taking trades without mechanically looking for things, okay, criterias or list of steps is gambling. It's no longer trading. So you don't want to gamble with your $5, $100, $1,000, $5,000, $2,000. You don't want to gamble it. You want to make sure that these things are correct. Then, after you've done your due diligence, if it fails, you know that, okay, fine. At least you have done your own due diligence. Do you understand what I'm saying? So, let's say the same structure. Let's say the same structure. Okay, you have a value structure. But no supply. That means when you look, this structure wasn't coming from a supply zone. What do? Don't take the trade. What do? Don't take the trade. Save your $10. Save that $100. You can take it to a restaurant, go and eat good food. Okay? Or you wait for your next trade, or you wait for the next setup. So this alone, no supply, you don't know where price is coming from, okay? You don't know where structure is coming from. Don't take the trade. You want to trace back and look for where this structure is coming from. Though the structure is valid, but no supply, you don't want to take the trade. You don't want to gamble also. You don't want to gamble, you don't want to take the trade. So as a result of that, what do? You just stay away. Don't be tempted to take that trade. Don't be tempted to take that trade. Okay? Because for every mistake you make in the market, you pay in dollars. Remember this. For every mistake you make in the Forex market, as regards your strategy, you pay in dollars. You pay in dollars. It might be $2, it might be $1, but you must definitely pay in dollars. Okay? So we are going to take live. Let's look at previous chart patterns and live examples. Okay, so let's look at it. Let's look at it. Okay, let's look for okay, let's go to Ethereum. I'm going to use Ethereum. Okay, I'm going to use Ethereum. So look at this chart. Can you see this chart? Can you see this chart? So I'm going to clear off all these and then we're going to analyze together. Okay, so I'll clear it off and then we're going to reanalyze it together. Now look at this chart. Can you see this chart? Look at this chart. Can you see? So what we have is this. We have a strand. Oh, sorry. We have this. Can you see? And so what we have here, okay, boom, boom, boom. Okay, so let's say we look at the chart and we saw structure. All right. So this is structure. You see this? Boom. So this is structure, right? This is just an effect. This is not a cause. The reason why we see price reacting at this zone, okay, is because there is a cause. So this reaction is just an effect. It's not a cause. This, okay, and all this, the liquidity and all that, the break of structure, you see the sweep coming, they are all effect. They are not cause. So what is the first thing I want to do? I want to make sure that everything is correct. So this is a break. So for me, I will place my tool and I'm going to measure my liquidity. Okay, so I can see that the wick is below the 50%. So that means it's valid. So I'm going to take my tool and then I'm going to draw. So I call it illiquidity, sorry. Call it what? Illiquidity. The next thing I want to do is I want to look for, okay? The next thing I want to do is I want to look for where is price coming from. I have seen that everything is correct, okay? And I can see the direction of the market, okay? So this market is an uptrend. So the next thing I want to do, or you want to do as a trader, is where is this structure coming from, all right? But before then, you have your transactional liquidity. This is transactional liquidity, right? So this is transactional liquidity. So I want to trace back. I want to look. So if I look, I can see that price is coming from somewhere. So this is a demand zone that I can see, and there is a fair value gap. Okay, so can you see that? So this is a demand zone. This is what? A demand zone. This is it. And then I wait for price to come. Boom. Okay, I wait for price to come in. And then boom. Simple as ABC. Do you understand? Go to the comment section if you understand. I just wait for price. Boom. That's it. Very easy. Is it easy? Very easy. I see my structure. I see my liquidity is valid. Everything is valid. I have known the direction of the of price of the market. What next? I look for where is price coming from. Do you understand? Kindly go to the chat box. Type I do. Go to the chat box if you understand. Kindly type I do. Say I do. So how then do you find out that the supply or the demand is real? It's simple. For every, okay, on a moving trend like this, on an uptrend, okay, lower highs, right? These zones are usually demand zones. These zones are usually what? Demand zones. Okay, so these zones are usually demand zones. And for the downtrend in a higher time frame, these zones are usually supply zones. Okay, do you understand it? It's simple. So these zones are usually demand zones, and for a downtrend, these zones are usually supply zones. So if you see your structure, assuming you saw your structure here, what do? You trace back, okay? You trace back, look at your left-hand side, locate the supply zone. The supply zone has an order block, okay? A fair value gap and an order block. But there's always, it has an order block and a fair value gap. It has another block and an FVG. Remember that. Okay? That's what. Who is that? Can you please mute your mic? If you're in this meeting and you want to be in this meeting, kindly mute your mic. So we have an FVG. And we have an order block here, okay? I think the tool is not. Let me use a text. Okay. So we have an FVG, okay? Same thing here. So let's say we have a structure here. What do you want to do? Where is price coming from? Simple. Usually, we have another block. For those who don't know order block, maybe I'll do a video on to spot valid supply or demand zones, okay? And then there is an FVG here. That's it. So once you've confirmed this, what's the next thing? You wait for price, boom. Same thing, you wait for price, boom. Do you understand? Very easy. Is it easy? Very easy. So if you understand this, then we go to the next one. So the next one is knowing where price is coming from. The next thing you want to look for is key resistance and support. Key resistance and support. So for a key resistance and support, this is what we do. It's very easy. We apply the basic rule. And the basic rule is when a resistance is broken, it turns to a support. And each time a support is broken, it turns toward a resistance. So it's simple. So we have this. Resistance is broken. What happened? It turns to a support and boom. So this is called arrow BS. It's called arrow BS. Resistance, break, turn, support. The same thing applies. The same thing applies. That each time a support is broken, it turns toward a resistance. It's very simple. Very, very simple. So let me place it here. So each time a resistance is broken, what happens? It turns to support. And each time the support is broken, what happens? It turns to boom. That's it. Do you understand? So if you have a knowledge about this, then it's easy for you. These are basic knowledge about resistance and support. So you want to see your Quasimodo reacting at the support or the resistance. Because remember that this strategy is a reversal action-based, price action-based reversal strategy. So it's used for reversal, all right? It can also be used for a trending market. But then when you see your structure or price giving you that structure that we trade, you don't just want to take the trade, same way I talked about supply and demand. So you want to locate or look for where price is coming from. So the next one is resistance and support. So for example, let's look for, let's have, so for example, we have this, and then price reacted here. Okay? Now take note of this. You don't just want to take this trade. This is
So I think his network got disconnected. Let's just give it a few minutes. He's gonna be back.
So sorry for the glitch. So as I said earlier, I don't just want to trade the structure, even though the structure is correct and all the criteria are met. The next thing I want to do is I want to trace back, look at my left-hand side, and then I want to find out where price is coming from. So if I look at my left-hand side, apart from supply and demand, the next thing on my mind that I'm looking out for is resistance and support. So I want to see that this structure is formed, okay, close to a support or a resistance. So we can see, so what do? I take up my tool and I place it on the body of the resistance. That's it. Okay, so then what do I do? What do I do? I wait for price to come in. Tap, boom. That's it. Very easy. Do you understand? Very easy. So the same thing applies. So let's go. The same thing applies. We have this. So what am I going to do? I have my structure. Remember, structure is just an effect. So what am I looking for? I'm looking for the cost. So what is the cost? I look at my left-hand side. And then I look for what? It's support. I place my tool. That's it. So if I have these, the next thing I'm expecting is boom. Very easy. Easy as ABC. Do you understand? If you understand, kindly go to the comment section, say I do. If you understand, kindly go to the comment section, say I do. This thing happens every time, every time. It happens every time. I mean, every time. Good. It happens every time, every second on the chart. So we're going to be looking at a chart. I think we're going to be using GBP. We're going to be using GBP NZD. That is, let's use GBP NZD. Take a trade that was taken. So let's look at GBP NZD. Okay, so I'm going to take off all this. Okay, I'm going to take off all this so that we can analyze together. Okay, so now let's look at this zone. We're going to look at this zone. We're going to look at this zone. Okay, this is the zone we are looking at. So now, as we can see, we see structure, right? Look at it. This is structure. Right? That's structure. Am I correct? Good. If this is structure, what am I going to do? I'm going to measure my liquidity. Can you see it's at the demand zone below the 50%. So it's valid. So what am I going to do? Simple. That's my liquidity. That's my liquidity, okay? So I have seen this structure. Good. What is the next thing I'm going to do? I'm going to look for the cost because this is just an effect. This is price reacting, okay? Because there is a cost somewhere. So I'm going to look at my left-hand side. So I'm going to trace this, look at my left-hand side. Okay. And then when I look, what am I saying? Okay. When I look, what am I saying? So I'm going to go to 1 hour time frame based on what I'm saying. I will use the 1 hour time frame for ROBS and SBR. Okay, I'm going to use the 1 hour time frame for ROBS and SBR. Okay, so I can see on my 1 hour time frame, what next am I going to do? I'm going to go to line chart. That's how I do it. I go to line chart. Oh, sorry, that's not where I want to go. Okay, good. And then I'm going to go back. Then I'm going to trace it if it falls on the line chart. Good. Can we see? Okay, so can we see what's happening here? So this structure falls exactly on the resistance, which is now a support. So can you see this? See this? Look, can you see? That's it. And then what do? I wait for price to come. So we can see that price came, swept this engineered liquidity or structural liquidity, and then boom. So can you see that? This is engineered liquidity I explained to us yesterday. So can you see? Boom. And what happened? Price, it take profit. Look at it after how many days it take profit. So let's go to 3 hours chart again. Good. Can you see? Targets, the most recent high. That's it. So can you see that price 8 TP? The same thing, structure, liquidity. Can you see? And then price came, swept the liquidity, and then boom. But you must find out where price is coming from. So can you see? That's it. That's it. For additional confidence, we can also see that there is another block here. Look at this other block. This is a demand zone also. This is fair value gap. So can you see? So this is an additional confluence that makes this zone a strong zone to buy, or that makes our structure valid to be traded. Okay? It makes your structure valid or your setup valid. Without this, you don't take the trade. If you don't see a demand, supply, you don't see resistance and support, you don't take that trade. Even though it's a structure, you don't take that trade. So this is a live example. Can you see this? Can you see this? All right. So that's what you want to do. That's what you want to do every day. That's what you want to do every day. You don't just want to jump in. The same thing for yourself. You don't just want to jump in. You don't just want to jump in. So let's look at another pair. So let's look at another pair. So let's look at Euro NZD. I think we have a setup there 2 days ago. So let's look at NZD, Euro NZD. So can you see this? So I'm going to clear this off. Okay, but this is the trade I'm waiting for. So if we look at this, let's go to 1 hour. So all these are confluences that you must have to the strategy. So if you go to 1 hour, we see structure here. Can you see? In fact, let's start from the beginning so that you understand it. So I'm going to take this off. I'm going to take all this off, so you understand. Okay. So now look at where price is coming from. Can you see this? You see this? Boom. Can you see? Boom. Okay. Can you see that? So this, can you see this? Okay. So now let's look for structure. Okay. Let's look for structure. Let's look for structure. Okay, so can you see? Here we have structure. Look at this structure here. Look at this structure here. Can you see this? Good. Now, we have this structure. Okay. And this is also structure. This one here on here. This is also structure. Can you see this? So this is also structure. Good. But then you can see that price reacted at the support. I want to go to line chart and pick up my tool and place it. Boom. Accurately. I don't just want to place it anyhow. Accurately. And then look. So can you see where price is reacting? This is 1 hour time frame. So you can see where price is reacting. Can you see? Sharp. And this week also came from somewhere. Look, we have also the supply area here. So can you see that? We have a fair value gap. Great. Now, what's the next thing? If I have that, and I have this structure here, I also want to look for where this structure is coming from. This here, this week. So this is also a supply. Can you see that? Sharp. That's also a supply. And this is a key resistance. So you can see that this zone is a strong zone for sell. That's it. And then what happens? I wait for price to come in. My alarm is already set. Okay, everything POI has been calculated. So I wait for price. You wait for price to come in. Just wait for price. We keep waiting for price. It doesn't matter how long. We wait for price. Boom. That's it. So we have supply. We have key resistance at this zone. Look at this zone. We have supply, and we also have what? Key resistance at this zone. Can you see it? And we have our structural liquidity. That's it. Very easy. Do you understand it? Do you understand? So if you have a question, kindly ask your question right now. If you have questions, do well to ask your questions right now. We are taking questions now. If you have, do you have questions? Ask your questions now. Remember, so before your questions, let me do a recap. You don't just trade the structure, even though your criteria are correct. The next thing you want to do is, I want to know where price or structure is coming from. My structure, I want to know where it's coming from. So you trace back because it gives you, it's like a confluence, all right? All right, knowing where price is coming from is an additional confluence to that criteria for the structure. Okay, it makes it stronger, applying the law of cause and effect. I told you for every effect, there is a cause. So the structure is an effect. Where price is coming from is the cause. All right. So when you see your Quasimodo, know that it's a it wants to reverse at that zone, but something has made it, okay, to be at that zone. That is the cause. So it is reacting at that place, forming structure to reverse. So you don't just want to take that trade, even though it is structure, you want to know where price is coming from. Do you understand? So that is why you have to trace back, go to your left-hand side, always look for supply and demand. If you don't see supply and demand and you're not sure that that is a valid supply, you're not sure, don't take that trade. If you're not sure that it's a resistance or a support, don't also take the trade. Do you understand it? So this is what we did here. Can you say it? So do you have any questions? If you have any questions, quickly before we close. I just did a recap. The video will be uploaded on YouTube. Okay, so do well to go and subscribe on the YouTube channel. Subscribe on the YouTube channel. Always subscribe on the YouTube channel. For those of us who have watched the video, do well to subscribe. All right, do well to subscribe and like and comment. Thank you so much. So we come to the end of our class for today. We'll see you tomorrow, same time. Thank you all. Glad to have you all.